What the hell is going on, guys? Today, I'm going to talk to you guys about the first 3 years of my dividend portfolio and walk you guys through year by year from 2012 to 2014 how my strategy has changed, and it has changed pretty dramatically. And I'll probably have this be a 2 or 3 part series where today I talk through 2012, 13, and 14, and then maybe the second part I'll do tomorrow and talk about how maybe things changed from 14 to 16, and then obviously you guys have been keeping up with what my portfolio has been looking like in 2017. So let's get into it. So, talking about what I invested in 2012, it was a very small contribution. I had only just started working as an intern as an engineer for the summer, and so I was investing to a company 401k through Fidelity, and I actually opened up a brokerage account, and that's essentially what I'm showing you guys in this today. So by the end of the year, I'd invested $650, of which I got $497 of actual income, or I guess capital distribution. And really, what I did was in July I bought San Juan Trust, which is an oil and gas royalty company that pays you basically based off of what they sell. They get a certain percentage of it. I believe it was owned by ConocoPhillips. And then I had also day traded, or swing traded rather, Rexon Pharmaceutical, and barely made any money off of that after commission. Um, so yeah, this is really it. You can see, open the account. Didn't have any money coming into January 1st of 2012. Added $650, and I ended the year at a paper loss of 500, or just under 600 bucks. So paper loss of losing, 50 bucks or so. You can see, really not much. I mean, I essentially made just under $5, which was a start, right? You got to start somewhere. But then moving to 2013, I started thinking, I guess, that I was a lot smarter than I really was, for sure, and really just trying to do a lot of swing trading and day trading, and really, I guess, just trying to get experience. So I guess before we get into some of the big companies that I invested in, and the majority of the things I invested in my individual brokerage account, I added just under $5,000. In my IRA, added just over $1,000. So I think that ended up being just under $6,000. Yeah, here, and of which I made very little income because I was probably buying in and out of companies so quickly, and also I wasn't investing in a lot of dividend-paying stocks at the moment. I was mostly focusing on smaller companies that had large growth potential and momentum stocks like your 3D systems. So let's kind of go back into it. So I held Sony. At this point, I wish I kept on to it. But at the time, I guess I was thinking more short-sighted, get rich quick, and not really long-term. So that's a little bit of how my strategy has changed since then, as you guys probably look more so at my portfolio. Then you can see a lot of these other companies, Novagen, Yingling Green Energy. A lot of these companies don't really pay a dividend. San Juan Trust does, and then this mutual fund that I bought and sold out of really quickly obviously does as well. Um, and then I bought a bunch of ETFs, and so I think at this point I was just like, well, I could buy into individual stocks, but then I could buy into these. And then I thought, well, why do that if I could just buy into these individual ETFs and be commission free, and all they do is charge me an expense ratio. And in all reality, I kind of wish I did, because 2013, as you guys remember, was a phenomenal year. It was like 25-30% return. And had I just probably invested in the S&P 500 or the small caps, I probably would have been able to come out with another couple $1,000s from there. But yeah, just looking at the actual statements themselves, beginning value $600 coming into the year, added another $4,800. or so into my individual brokerage account. And these were the things that I was holding, Discover, Organova, Waste Management, Yingling Green Energy. Um, wasn't anything too spectacular at the time. Rolling over to my Fidelity IRA, and looking at it, you can see that in 2012 I didn't really have an IRA, so the 2013 was the first year I had an IRA, and total income I got was 42 whole cents. So that was kind of nice. I think I ended the year, and I think the only thing I really had was, yeah, 2 ETFs, like I mentioned earlier. I was really just going to try to do the hands-off, just long-term, starting to move into long-term, type of deals, which I think you guys realize now that I don't really deal with a lot of ETFs now. I more do individual stocks, but I think at the time I was like, I'll just focus on my work. I'll focus on my job. I just started working again, full time. For my internship, I got hired back full time. And I said, you know what? I'm just going to focus on my job, put it into ETFs, and just let it go. And I'll get dividends, and I'll, be able to make money, and I'll just worry about retirement. And I think you could probably see from 2013 to 2014, these aren't updated here. So let me just erase these. But I started getting more into buying actual dividend-paying stocks and not ETFs, kind of knowing what I'm actually getting myself into. So total dividend income that I made was, just under $300. Continued to invest, just over 11, almost $12,000 into my individual brokerage account, my IRA, and then obviously I have my computer shares account as well. So in 2014, I probably invested around, $12,000 to $13,000 worth of capital. So right now, you're probably looking at, between all three of these years, probably closer to like $20,000 of total income invested between these three, and that's not including my 401k. I think you guys know, I don't really show you what's in my 401k. I'm talking more so about what I can visualize and see today. My 401k, I basically just set it and forget it for retirement. And then maybe if I wanted to get creative, bring it in if I have the luck of doing really well. But as you guys probably remember, individual brokerage account, I think I took some money out of that in 2013 and put that into my IRA. And then obviously 2014 is when I really started, to get real money, because I just started working full time in very late 2013. So I had my $6,200, and I ended up walking away on the air with $75 for my individual brokerage account. And like you guys saw, I started getting, more individual stock focused rather than ETFs. I sold out all the ETFs and I started doing individual stocks. Seadrill, this is before they cut the dividend, and I think I got out just in time. Berkshire Hathaway at $1.50. Discover Financial, Hershey's, Icon Enterprise, which I still own today, Kinder Morgan, which I still own today. I own a lot more shares of both of those now. Petrobras, which I sold out of, and then Suncor I still have. Union Pacific I still have, Waste Management, and Wells Fargo. I sold out of Waste Management, but now I brought back in. But I also have, almost 100 more shares than this in Wells Fargo now, which is also pretty cool to think about how I've expanded some of my portfolio positions. Now moving over to the IRA, you guys can see that by the end of the year I had $7,500. So in 2013 I invested say $250, and then 2014 I invested the $5,500 max that I could. I ended the year at $196 in total income, which was tax free obviously because it's an IRA. But I guess the main things I was investing in, General Electric, I kept buying at a cost basis and lowering my cost basis over time. BHP was my first time buying into it. I then averaged down as the price dropped down into the 20s. And I think I sold, I eventually ended up getting around 200 shares, and I sold these original shares at a break-even price, but that's a different story for a different day. I had General Motors, Icon Enterprises again, Intel Corp, which I think I got at a pretty cheap price. Yeah, the cost basis was 193, and I sold for 267, which wasn't bad for 7 shares. You think about it. And then I was holding a lot of preferred at the time, preferred stock, getting that 6-7% dividend, which I was really excited about back then. But yeah, it just kind of just begins to show you how my portfolio has changed. If you think about it now, where I probably have upwards of um, 3 times as large of a position than I currently had in here. So I had about a $20,000 position here, and now I probably am closing in on the $75,000-$80,000 position now. Getting a lot more income. It started from the 0 to very minimal to $300 within 2 years, and not really even holding constant into buying and holding strategy. It was flip flopping around and taking money away. And since then, I've next year I'm expected to blow past that by 10 times. So just getting started there. Pretty interesting what you can really achieve so early on in your career if you just put your mind to it. So actually going through the computer shares, sorry I went off on a tangent there, but actually going into the computer shares, originally invested in Altria Group, Aqua America, IBM, McDonald's, Clorox, and Verizon. And I think PG I invested in here as well, but that has moved over to Shareowner Services, which is owned by Wells Fargo. So I don't know. I lost that password. You guys probably hear me say that probably every other video, but I lost that password, so I don't know what the cost basis was or what type of dividends I got back then, because all the information is no longer on computer shares. It's over there now. So just kind of unfortunate. Anyway, so looking back on it, things have really started to move quickly. 2013 is white bars throughout here, and my total dividends by account. And you can see the baby blue is 2014. I don't even have 2012 on here because it's not really even worth mentioning. But you're going to see how minuscule it was that early on, and this was with $20,000 or so worth of capital invested at the time. I think what really it was I just didn't have as much of it invested, and you weren't able to see the effects because you didn't have the full year of, say, that $20,000 invested. And I also was still trying to get down my strategy. I was switching between penny stocks and high growth stocks, and then I was switching to, I'm just going to set it and forget it into ETFs and let it go. And now 2014 to now, I've kind of been sticking with my guns and saying I'm going to invest in individual stocks. My 401k is where I'll to set it and forget it into a steady allocated mutual fund / ETF type portfolio, and that will be that. And then I will utilize this as my gap fund between getting me to where I am today to when I need that 401k money. So hope you guys really like this video. Like to hear your comments down below. Don't forget to like and subscribe to the channel. And please keep in mind that I will be doing part 2 on 2015 through 2017 just tomorrow. So I hope to see you guys then, and I'll talk to you guys soon. Have a great night. Bye-bye.